In today's market update, we're going to be looking at some targets and levels to watch in the various markets that we track. It is the Thanksgiving week in the United States, Thanksgiving coming up later this week. So if you're in the US, I hope you have a very good Thanksgiving. Let's start, as we always do, with the S&P 500 using SPX data, and here is the analysis that we've been tracking with a 40-week cycle trough in August. You will know, watching previous market update videos, that we have had some debate about the position of this 80-day cycle trough, but here you can see the pin symbol in Sentient Trader representing the fact that I have in fact influenced the analysis and asked Sentient Trader to place the 80-day cycle trough over here at the beginning of November, just before the US elections. The reason for this has to do with the way in which price has interacted with the 20-day cycle FLD. You will know from our previous market update video, which was recorded 2 weeks ago, that was on this day over here, that we were looking at the possibility of an 80-day cycle trough over here and therefore an early 40-day cycle trough over here. Either situation gave us a good long trading opportunity as price crossed up above that 20-day cycle FLD. But you will notice that in the past week, price has dropped just below the 20-day FLD, and then it has immediately reversed upwards and has attempted to keep track with the FLD. And in early overnight trading, as you can see over here, price has just popped up above that 20-day FLD. Let's zoom in and take a look at a little more detail. Here you can see how price has so far, and I'm recording this video before the markets in the US actually open, provided us with a bit of a gap up over the weekend, crossing over the 20-day FLD. Now, if this had only been a 40-day cycle trough, as suggested in the previous market update video, we would have expected an F category interaction here, where price crossed down below the FLD, achieved its target on its way down to the next 80-day cycle trough. However, price has clearly not done that, making the alternative analysis, as suggested by our analysis of the Australian stock market, the more likely one. And if we take a look at our interactions between price and the 20-day FLD, you can see that the interactions have been labelled accordingly, with this A category interaction over here following the US elections, and then this is a B category interaction, and then a C category interaction. This strong move up and then strong move down again made it difficult for price to find support at exactly the level of the 20-day FLD, as it is usually expected to do for a BC category interaction pair. But of course there was fundamental interaction. In other words, the news events happening at the time influenced price action, and we had a probably more bullish and then more bearish move than the cycles themselves would suggest. The good thing from our side when this happens is that we can generate a target from this low price over here to the price at which median price crosses the 20-day FLD. We can extend beyond the FLD to find a target for this price move. And that target is just over here, a little bit below 61.50. And so that is an interesting target for us to watch as price approaches it. So far, we have no reason to believe that price will not achieve that target. But we need to bear in mind that the next 40-day cycle trough is expected over here in about the middle of December, and we should keep a close eye on the FLDs for indications that the peak is forming. And so levels to watch are going to be all of our shorter cycle FLDs over here. As price comes down and potentially crosses below those FLDs, we will receive confirmation that a peak has formed, even if the target has not been reached, because price is expected to cross down below each of these FLDs on its way to the 40-day cycle trough in the middle of December. So those are going to be useful levels to watch. In the Nasdaq, we had exactly the same debate in our previous market update video, which was of course recorded on this day over here, in terms of the position of the 80-day cycle trough. Now you will notice that I have not actually influenced the 80-day cycle trough to the more likely position of that trough over here, which would be at the same time as the Australian stock market formed a trough, and also of course the S&P 500 according to the analysis that we have just looked at. I haven't done that because I believe it's not necessary to keep constantly influencing an analysis to make sure that it stays in line. All that is important is that we understand what we are expecting from price interacting with the FLD, because the FLD is our primary trading tool. I do believe that the 80-day cycle trough probably did form over here at the end of October, in line with the Australian market and the S&P 500, and that this is therefore a 20-day cycle trough. The interactions that I am therefore expecting would be a B category interaction and then a C category interaction. Let's zoom in and take a look at a little more detail. The interesting thing about the Nasdaq is that it has not yet crossed up above the 20-day FLD. Of course, I'm recording this before the US markets open, and so it is quite possible that it will cross above the 20-day FLD today. If this trough at the end of October was an 80-day cycle trough, I will draw in the diamonds here for that 80-day cycle trough, then of course this would have been a B category interaction. We'd be looking at a C category interaction occurring now, expecting a price cross up above the FLD, generating a target to the upside. When price does succeed in crossing that FLD, we will calculate our target by measuring the distance from this price low over here up to the point at which the median price crosses the FLD. But what if the analysis that we're seeing on our charts is actually the correct analysis, and that these diamonds should not be placed here? The 80-day cycle trough is correctly positioned. Well, then you will notice here the nest of lows for the 40-day cycle trough, indicating the likelihood that this here is our 40-day cycle trough. In that case, this interaction would in fact be an E category interaction. What is the difference? There isn't one. If this is an E category interaction, which is our alternate possibility, then we are also expecting price to cross up above the 20-day FLD at this time and to generate a target to the upside. Again, we need to keep an eye on our FLDs. If price starts falling down below these 5-day, 10-day and 20-day FLDs, we need to be aware of the fact that a peak has formed, whether or not that target is reached, and that we are looking for our next important trough in the Nasdaq, also expected in about the middle of December. Here is the Australian stock market, the ASX index, which we have been tracking, and has proved very useful to track this index in recent market update videos because of the principle of commonality that tells us that markets move with a great deal in common. And whereas the US markets were being fairly strongly influenced by the fundamental interaction of the US elections, the Australian stock market was not so greatly influenced by that, and it provided us with early warning that the 80-day cycle trough had probably formed over here at the end of October. We discussed this in the previous market update video. Since the formation of that 80-day cycle trough, price has of course crossed above the 20-day FLD. It has now neatly achieved its target, which it only did over here. And so let's zoom in and see what lies ahead for the Australians. Here is our A category interaction as price bounced up above the 20-day FLD. Let me turn on the labeling. There we go. Here is our A category interaction. Here is our BC category interaction pair, which of course is expected to form at about the time that the 20-day cycle trough forms. Here is the nest of lows for that 20-day cycle trough. It is very likely that that 20-day cycle trough has formed. Whether it is here or whether it is here could be up for debate, but it is likely that that 20-day cycle trough does now lie behind us. The next thing that we would expect, and the next important level to watch, would be when price comes down to the 20-day FLD on its way down to the 40-day cycle trough, which in this market is also, as in all of the other markets we've looked at, expected in about the middle of December. We would expect price to cross down through the 20-day FLD, generating a target to the downside for the formation of that 40-day cycle trough. We could speculate that that might occur in about a week's time, although of course we do not know that. But if it did, as you can see, we would very possibly expect the 40-day cycle trough to form at about the level of the 40-day FLD, should we be looking for that 40-day FLD to provide support. The interesting thing is that we would not. Let's zoom out and understand why. Displaying only the 40-day cycle FLD, you can see the sequence of interactions with our A category interaction, our B and then C category interactions that occurred over here, our D category, and then our E category interactions. The target generated by this E category interaction has indeed just been achieved, and so our cycle impetus in terms of achieving that target has been fulfilled. That doesn't mean that the markets are immediately going to turn down, but it does indicate that the cycles influencing the markets to move upwards are possibly exhausted, and they are no longer influencing the markets to move upwards. If you take a look at the sequence of interactions, our next interaction between price and the 40-day FLD is of course an F category interaction. When that occurs, we are expecting price to cross down below the 40-day cycle FLD on its way down to the 20-week cycle trough, which is expected over here in January of 2025. And so we should definitely keep an eye on this 40-day cycle FLD, not to provide support, but potentially for providing an acceleration point as price moves down towards the 20-week cycle trough. The Nifty has been interesting. We have been tracking the Nifty in the previous few market updates, and we've been looking for this 80-day cycle trough to form. Here you can see is the circle and whiskers for that 80-day cycle trough, indicating that it was expected way back in October, and it is quite possible, of course, that this was in fact the 80-day cycle trough. If we count the number of bars that have elapsed from the 40-week cycle trough identified at the beginning of August to this trough that has now formed over here, you will see there have been 108 days. This makes it more likely that this is an early 20-week cycle trough than that it is a late 80-day cycle trough. The reason for that has to do with the average wavelengths of these troughs, and I would encourage you to download the 10 Core Concepts document that I will provide a link to below this video in order to understand that. But as pointed out in our previous market update videos, our trusty FLD provided us with very useful information in terms of identifying the trough. In our previous market update video, which was recorded on this day over here, we were of course looking for the 80-day cycle trough to form. We had not received confirmation that it had formed because price had not succeeded in crossing above the 20-day FLD. It had instead found resistance at the level of that 20-day FLD on these two occasions, including perhaps this bar over here on the day that we recorded the previous market update video. However, as you can see, in the weekend that has just passed, price has succeeded in crossing up above this 20-day FLD, thereby confirming that a trough has formed in the market. Whether we call it an 80-day cycle trough or a 20-week cycle trough makes little difference. The important thing is that we are now expecting price to travel up and reach its target, which is at this level over here, just below 25,000. The next thing that we would expect is for the 20-day FLD to provide support at about the time of the 20-day cycle trough. This analysis will of course sort itself out as price action unfolds, but our expectation for the 20-day cycle trough would be that it would occur about 17 days after the trough that formed last Thursday, placing that 20-day cycle trough over here on about the 8th of December. And so at about that time, we would be looking at the 20-day cycle FLD to provide support to the Nifty. Gold completed its move down into the 20-week cycle trough that we were speaking about in our previous market update video, and actually formed that trough, as you can see, on Thursday, the 14th of November. Price then came back up to our 20-day FLD, crossed neatly above that FLD, generating a target to the upside. That target, as a matter of interest, is at about a level of 27.65. Notice that the magnitude of this trough has increased from 20 weeks, as we were looking at in our previous market update, up to 40 weeks. This is not an unusual occurrence, particularly in gold, where the trough analysis can shift occasionally, and the reason for that is because of this strong move down and then strong move out. Sentient Trader measures something called the plunge and then the bounce into and out of a trough, and it will adjust the magnitude of the cycle troughs that it identifies in its analysis on the basis of the plunge and bounce. What are we looking at next for gold? We are of course expecting it to reach up to its target over here of 27.65 roughly. We have a 20-day cycle trough over here at the beginning of December. At that time we would expect the 20-day FLD over here to provide support to price. then given the fact that this is a 40-week cycle trough, we would expect further bullishness before price drops down into a 40-day cycle trough, also expected in the middle of December. It is interesting how gold has kept pace with the stock markets recently in terms of its trough analysis. There is a general assumption that gold and stock markets tend to move in opposite directions, but as the cycle analysis has shown us recently, that is certainly not always true. Finally, Bitcoin has been a bit of a poster child for Hurst cycles. As you can see, the cycles have been playing out in a very beautiful fashion. In our previous market update video, we were discussing this 40-day cycle trough, which, as you can see, has still not been phased by Sentient Trader. The reason for that is that in order to phase a cycle trough, Sentient Trader needs some information about price crossing FLDs or VTLs, or finding support at the level of FLDs. But as you can see, Bitcoin has been heading upwards without very much pause to form any cycle troughs. It now seems very likely that the 40-day cycle trough in fact formed over here in this rather insubstantial period of consolidation in the Bitcoin price, most likely in fact on this bar over here on the 18th of November. What that means is that Bitcoin is now in the final 40-day cycle of the current 20-week cycle, which is expected to form a trough at about the end of this year. What is the target for our upward move? The interesting thing is that we have run out of targets generated by price crossing FLDs. And so for now, the only target that we have is the very obvious level of $100,000 that price came very close to last week. It didn't quite touch that level, but it very nearly did. That $100,000 level is a psychological level, if you like, and is a very likely target for this move. However, because it is not in fact a cycle target, it doesn't necessarily mean that when price achieves that level, it will immediately turn down because of the lack of cycles pushing upwards. So what can the cycles tell us? Well, because this is the final 40-day cycle in a 20-week cycle, it is expected not to be the most bullish of those cycles, because of the fact that we have the 80-day and the 20-week cycles now pressing downwards. Displaying the semicircles in Sentient Trader gives us a good way of visualizing the influence of these cycles. And here you can see that the 80-day cycle and the 20-week cycle are expected to be moving downwards. However, price is still moving upwards. Why is that? It is because of these cycles over here, which are of course still moving upwards, the 40-week cycle and the 18-month cycle, because of the fact that we have identified this trough in early August as an 18-month cycle trough. Levels to watch in Bitcoin are going to be the various FLDs, the 10-day, 20-day, 40-day, and even 80-day FLDs. As price crosses down below those FLDs, we will receive confirmation that a peak of the various magnitude cycles has formed. We are, of course, expecting a 20-week cycle peak to form before the end of the year, at which time the next 20-week cycle trough must form. However, given the obvious bullishness of these longer cycles, that 20-week cycle trough might not be a very big and dramatic trough at all. I do hope you found this market update useful and interesting. If you have any questions, please put them in the comments below the video or join us on our Hurst Cycles Discord server. There is a link to that server in the description below this video.